Welcome back, and let's start the fireside chat on Affordability Redefined. We have with us Amrish Rau, the CEO of Pinelabs. I'm sure all of you have been waiting to see Amrish. He is, by many, the star attraction, at least very much for this fireside chat. The panel will be hosted by Rahul Kothari, the Chief Business Officer of Razorpay. So please join your hands, clap in whichever room you are in right now, and welcome on stage both of the panelists. Get ready for a fireside chat. Hey, Rahul, take it away.
Hey, Anand.
Hey, guys.
Hey, hi, everyone.
Hey, Rao.
Yeah. Hey, Amrish. Welcome to FTX 2020 Fireside Affordability Chat. Really so happy to see you again.
Absolutely, Rahul. Great to catch up with you in the virtual world.
Yeah. At least that's what we can do now. Yeah. So, Amrish, before we start our chat, I will throw a few facts and figures to the audience to just set the stage. Razorpay saw around 160% increase in the transactions on the affordability suite in last 1 year. Today morning, in Australia, a company called Afterpay, I think most of you know about it, its stock hit $120, which is the highest ever, 1,000% increase in last around, I think, 6 months, and overall valuation of 20 billion. Back in Europe, Klarna, I think, got a funding of $650 million around 3-4 months back. In US, Affirm, another affordability company, buy now, pay later, and unlike any kind of a good, true tech company is looking at doing an IPO, and again, something in the range of $5 to $10 billion. Back in India, Pinelabs saw phenomenal growth on their affordability suite in last couple of quarters, and now I think inspired by that, they're also planning to go global. So with all this context for the audience, Amrish, here's the first question I have for you. So Amrish, you ran First Data, and that's where you built your first affordability products. Then you found Citrus Pay, where you literally reimagined the affordability products and created a product called Lazy Pay way ahead of its time. I think today it has around 4 or 5 million consumers. At PayU, you scaled, and I was, I think, part of some of those conversations where everybody thought that you were thinking way ahead of time, but I think still you kind of, scaled a lot of these affordability products out there. And now at Pinelabs, you are taking it offline, taking it global. So I can't think of anybody else who would have this wider perspective on affordability. So really want to understand how your entire thought process, your view about affordability evolved as a business leader over the years, and maybe also as a consumer.
Rahul, it's really good question, because it gives me a chance to reflect back on how the thinking has evolved. But before I come to my thinking, let's just look at the words involved into this entire space, right? It used to be loan, then lending, then credit, then it went into buy now, pay later, and now you're calling it affordability. But if you see the trend of it, right, this is moving more and more away from what a bank does to what a consumer wants. Consumer wants affordability, bank wants to give out a loan. So when you think of this, the product is more being created to suit the consumer rather than to suit the bank and financial institution. There's a big difference between the two. So that's one thing which has changed over a period of time. The second thing to it is in Citrus, in PayU, when we started to conceptualize Lazy Pay, we actually saw this product as an extension of payments. And I'm going to actually walk you through how the thinking process went, right? So the thinking process was everybody who had started to think about this whole concept around wallets. And my thinking was wallet is very, very cumbersome. Nobody is going to actually go ahead and keep money in a wallet. Then everybody started talking about let's do the card store kind of an capability. And if you do a card store capability, RBI was still looking for a second factor of authentication. So you either had a OTP or you still needed a password before you can actually get to true seamless checkout by just your stored card out there. So what is as close as a seamless flow that you can do was something which really kept me awake here. And that's when I started to come to a point where I said that if you can identify the consumer on their past behavior, if you have enough of their identity with you, you should be able to give them small credit. And that became the genesis of lazy pay. So very unlike a classic lending product, lazy pay was thought as an extension of payments. And that became the starting point of this whole credit journey in my head, right? And what I'm now getting to see, and there, for example, the transaction volumes can be as low as 1,000 rupees, 1,500 rupees, and all of those it could be, right? But in Pinelabs, what we are going after is we are going after the higher end of the market, where we are today going after, you and me wanting to go out and buy electronics, which could be 20,000, 25,000. There it is no more about extension of payments. It's about affordability, as you rightly said. How can I buy a 55-inch screen instead of a 42-inch screen? That is really the problem statement that you're solving for when it comes to affordability in today's market. And that's really where we are seeing our sweet spot to be in. We are 100% focused on the offline space and very keen to drive that market all through the country.
Awesome, amazing. And Amrish, I know there has been great success in this offline product over the last couple of quarters. Why go global? There's a big opportunity out there in India. Is it something that you see is a product that there's a strong requirement in some of these other geographies you are going into? What's the thought process behind it?
It's a very interesting question. And look, Rahul, I'm one of those guys who likes to experiment with various different things. So one of the things which I'm wondering is, if buy now, pay later and affordability for transaction is going to be a global wave where everybody is going to go into it, banks and financial institutions are definitely going to go into it, and schemes are going to help you drive that product. Now, schemes have a benefit and they have a problem, right? And that is everything gets related to an identifier, which is around the 16 digit or an identifier around the card. So what we are getting to see in India, we are almost getting close to about 100 million consumers having access to a certain amount of credit line.
Okay.
Now, I see exactly the same happening in all markets. And it could be a market of Philippines or a Thailand or Indonesia. You are going to get to see small credit lines getting created, which will be available for the consumer to convert every transaction into a 4-month installment or a 8-month installment program. So the question here is, should you wait for somebody else to go into that market, capture the thinking process about what is buy now, pay later, what is affordability, and can you be the first one to actually consolidate pay later services? Now, I just want to clarify here, by no stretch of imagination, we want to get into owning the credit line for our pay later solution. What we want to do is we want to enable credit lines of different credit issuers on our platform. So today we've got 35 different credit issuers on our platform. We have a very similar dream for Southeast Asia.
Great, awesome. So Amrish, now here is like like most of the conversations which eventually start getting into Bharat versus India, right? The conversations, and we talked about some of these typical buy now pay later products which are more towards convenience for the consumers. The lazy pay, for example, talked about, and also for affordability, like you talked about the products that Pinelab has. But still, it is typically for a urban, maybe to certain affluent rural, population. What has been? Have you any insights, or what is your view on how as a country are we doing enough for taking it to the next level, the Bharat, and from where you see it, how is it evolving?
The answer is, I would want to believe it. I'm taking it to the next level, but definitely not being able to take it to the Bharat, right? So we've been able to take it to A plus cities, and maybe A plus A and A minus cities are what we have got it covered right now. I wouldn't even say that we've done a good job in B cities, right? So For example, when you think about a Jaipur, Kanpur, Nagpur, we are there. We have absolutely taken the product into those markets. But today they are still India. They are still not Bharat by any stretch of imagination. See, what we are getting to see is that over the last 12 months, we invested heavily to go into the small streets of smaller cities and start to enable small traders, resellers for mobile phones, electronics, consumer durables. And as luck would have it is when COVID hit, those were those shops which started way earlier as compared to the big malls in a Delhi or a Mumbai. And you would see that in, let's say, the month of Navratri, on a Navratri to Navratri basis, the smaller shops have actually grown 100% on a year on year basis, while the large format retailers were still not anywhere close to 100%. They were actually about 20-25%. And the only problem is quite a few of them are actually closed. Now, we are getting to see this trend that in the smaller cities, on the back streets of those cities, there are many transactions which are now getting converted into pay later. Let me give you some numbers and specifics on this. In the month of October, in offline, like you guys in Razorpay are very lucky. You all do the easy part of online transactions. The in the offline world, we did almost 2,600 crores of volumes only on pay later in the month of November. So just to give you the perspective on how big this market is and how this big market is expanding.
Yeah, and you're also saying it's fundamentally also the growth is coming more from, say, a smaller trader and businesses, where historically the penetration of these kind of products has been significantly lower.
That is correct. That is correct. So definitely what we are getting to see is small businesses are really moving towards affordability, and even consumers are looking to affordability pretty seriously.
Great, great. So Amrish, I know you love to play cricket, and so there I will try kind of this Yorker for you. But yeah, I think like most of the Yorkers, you will hit this also kind of out of the park. So Amrish, everyone out there in the town is talking about every economist is talking about bad NPAs in the banks. Collection agencies are talking about it's getting more and more difficult to recover the money. And so as to situations where the pitch is, why don't you dissolve your, say, pension fund to pay back the money? What are we doing here talking about affordability? Ultimately, I think everybody thought that we will be able to underwrite better, we will be able to therefore lend better, and therefore able to recover better, and therefore take it to kind of next level. How do you reconcile the two things?
See, I'll tell you what. This takes me back to my to the hero which I've always held, which is Aditya Puri. Aditya Puri one day was asked the question saying, "How's that HDFC Bank never got hurt during the financial crisis?" And he was asked saying, "Sir, did you see it coming?" And Aditya Puri response on that one, he's saying, "No, no, no, I wasn't that smart to see the financial crisis coming. However, I knew one thing." Wherever there is a crowded market, it is very, very difficult to make money in a crowded market. And he felt that in the banking and financial services, in the derivatives market, just before the bust up of 2007, 2008, it had become a very crowded market where everybody was doing way more reckless things than what a typical banker should do, and it affected into something very bad. What we have seen is continuously, whenever there is a credit product which has a oversupply, which has crowding, it causes problems. So I'm in no illusion out here that we could see something very similar in the whole affordability space at some point of time. But right now, people in India are being very, very careful in terms of how credit lines are being created and whom credit lines are being delivered to. But I have to tell you this, if we push it too far, and the day wouldn't be too far away when somebody will come up with some plan which says convert it into an affordability transaction and get 5% over and above the 0% interest that you have. And that's when things are going to get a little bit difficult, right? So yes, I do understand what you're saying in terms of issues related to credit, but I don't think so. The market is crowded right now. That's one. Second thing is demand is huge right now. And one of the things that we learned with some of my prior experiences was if the ticket size is small and if the transaction is associated to a purchase, losses and delinquencies to that transaction is generally lower. So I feel very confident this market can safely grow over the next few years' time.
Okay, okay, got it. Uh, so Amrish, then I will kind of take one more tangent to it. You have kind of seen a lot of things in India. I'm sure you invest into a lot of companies which are global as well, and again with the Pinelabs experience, you are getting into the Asia Pacific as well. Uh, while you spoke about Asia Pacific, still, do you think the contours of the overall affordability is pretty much similar to in all the economies? Is it to do with low penetration of credit cards? Is it to do with just the convenience that the customers look at, or the contours different? And how do you see this different than probably some of the other companies which are based out in those developed world?
There is one very big difference between what an Affirm, Afterpay, and a Klarna does as compared to, let's say, what Indian affordability solutions are doing. And that one big difference is uh, all of these three international brands tend to underwrite the consumer on the fly. Of course, once the consumer has come on board, they put them into their database, but generally their product is first up being created for underwriting on the fly. On the other hand, the affordability solutions in India and the buy now pay later solutions in India are generally configured for consumers who have already been underwritten. So if you look at BNPL products on the internet, even in the offline world, they are generally already underwritten even before the person walks into the website or walks into the store. And that has completely different meanings, and it has a completely different backend to all of this, right? So the backend which in Klarna and Affirm and all create is a lot of data led. It is a lot of algo led, being able to underwrite on the spot without really taking into the credit bureaus. All of those happens. So I think there's a lot more work to be done by
Yeah.
Indian technologists to figure out how do you underwrite a consumer on the fly.
Yeah, definitely, and I think that's also going to be probably a limiting factor, as I said, in terms of how fast we can penetrate and kind of make sure the affordability reaches to the next level. So I think, yeah, that's true. Uh, say another question, Amrish here. So today we see different kind of players in the market trying to address affordability. Banks definitely kind of really take care of the fundamental need of the need of the credit for the customers, and also try to innovate on the overall convenience side. Then we have all the great fintech companies like Lazy Pay, like Zest Money, who are trying to address the convenience side of it and see how the lending can be done best. And then there are like the e-commerce platforms like Amazon or Flipkart who are also trying to get into, at least they're trying to make it as affordable uh, products, or try to launch the affordability products on the back of their overall marketplace solutions. So eventually, how do you see? And again, India being a pretty big market, I think there is always a space for different kind of innovations. But how do you see this overall space evolving? Uh, and typically, I've seen you generally very good at predicting things way ahead in advance. So, what would be your view? Say, if I take 1, 2, 3 years view, in which direction this thing would be going?
So Rahul, I'm playing with a new idea over the last few days. So, it has 20% answer to your question. There is 80% about me playing out an idea which is going on in my head. Um, so one of the things which I'm thinking is um, that today everybody who's doing banking services is wanting to go ahead and create a neobank. And what
Yep.
they are saying is, in a neobank, I will do deposits, I will do payments, remittances, lending, and I will combine all of these, and then I will deliver a neobank to the consumer. Uh, I'm wondering, is there a fault in that thinking process which says that deposit should not be linked to a bank? Deposit should be linked to a bank. That's a different story. So let me take something different. So let's say, let's take the example of lending. lending only happening from the bank is something which I feel is not necessary. So when you look at lending, a lending product can actually be delivered by a retailer, or a lending product could be delivered by an e-commerce company, which has very little to do the way how a bank looks at lending in the first place. Similarly, if my money is held in a certain place, if there is a certain entity which can go ahead and deliver me interest at that spot, maybe I will keep my money there instead of moving it into a bank. So, what I'm really thinking about is I think there's an opportunity to align these 4, 5 products to completely different sectors rather than like financial services.
Okay, I think Amish, this is very I think different than probably a lot of people out there would think. And typically, I think almost everybody is thinking it's almost trying to get as much money movement under the same umbrella so that you are able to underwrite the consumers better, and therefore you are lend better. But I think here you are saying
Exactly. Exactly. So lending should not be seen as a product only as a prerogative of the bank. If you're a retailer, if you're selling cars, if you're selling a Peloton bike, you need to have a lending business in your organization. Full stop. So is lending belonging to the bank, or is lending as a part of a commerce activity in the first place? I think that will be a debate over the next few years' time. That's
yeah.
the way I see it.
Sure, I think that would be very interesting, and it will be great to see how it unfolds. Also, Amish, we have spoken about, a lot of people talk about a lot of challenges of lending or in general growing fintech in India. Uh, what are some of the benefits or some of the easy things you see in India which helps companies grow? While there are some of these unicorns out there doing it, I think India also has a fair share of companies who are experimenting and scale decently well. So, what are the things which typically work in Indian context for companies to scale in affordability and really take it to the consumers?
So I think there are 2 parts to it, right? Affordability below a 5 or 6,000 rupees, where it is almost seen as an extension of payments. I think you've got to view the market completely differently. Affordability, where you're looking at a market between, let's say, 5,000 to 30,000, we have to view it completely differently. Now let's talk about the 0 to 5,000 one. 0 to 5,000 one has to be seen as a payments product. It is not an affordability product, and you build the product entirely as a payments product, and then you invest heavily to create scale on that payment product. So for example, I saw Razorpay is partnered with Cred. I can tell you today what is going to happen is, and not that anybody has told me this, but the way I see this is there's going to be affordability for transaction less than 5,000 rupees, which will also come up on Cred when it comes to a transaction there. So there it is all going to be about how many consumers can you bring on board? How do you give them affordability solutions so that they can check out faster? The 5 to 30,000 is a little bit more difficult. There, what happens is your value has become bigger, your tenure has to become smaller. And if your tenure for a 30,000 rupees ticket is still 3 tenures or 4 months, you are still controlling your losses way better. So there are different ways to scale the affordability business by playing on the value and playing on the tenure. And that can have a very significant impact on how that business grows. Look, I've always believed that I'm not smart to understand how to give out a 3 lakh rupees loan over 24 months. That's a
Yeah.
completely different ball game, which all my friends in banking understand way better than me, who has only been a payments and a fintech player.
No, I think that's a very good perspective. Uh, Basically, fundamentally, figuring it out how you understand your consumers better, and how I think so in India it gives you a lot of different options in terms of what you can try out to really see what would work in affordability versus what would not work, and therefore I think help scale. I think that is
That's
which.
right.
So Amrish, I think we have last 5 minutes for the conversation. I will quickly go to the Q&A session and a Q&A part and see any questions by the audience. Uh, So yeah, one question I asked was what you would see in next, I think 3 to 4 years. There's somebody out here is very interested to see whether we can see 10 years down the line and see how will credit work, which will become a part of Internet of Things. How do you vision it?
As I told you, I actually do vision credit going away from just a bank problem to becoming a commerce problem. And virtually, if you're setting up a new business, you've got to solve for credit, because every consumer is going to require credit to basically do the transaction in the first place, and for various reasons, right? In some case, it is taking a loan. In some cases, it is affordability. Some cases, it is just a faster payment transaction. So I do see this becoming very, very important means of checkout for commerce.
Got this. Got this. Uh, so yeah, I think kind of you addressed this, but still I think somebody wants to know more in detail. How do you manage the risks associated with collateral-less credit line? So why I think we look at the please continue.
Like I said, value and tenure is the best way I feel that you can manage this.
Great. So thanks, Amrish. I think these are the questions I have. Anything else that you want to leave the audience with in terms of any deep insights that you have got across the experience you had on affordability?
I just wanted to congratulate everybody at FTX 2020 for doing this event. I want to congratulate Harshil, Shashank, Rahul, you for all the great successes that you've achieved over the last 18 months and 36 months. This is a classy company, and this is a great event that you all put together. Thank you very much for inviting me here.
Thank you so much, Amrish.
Thank you.
Bye-bye.